You're watching The Week Ahead. I'm Darren McDermott. I have Guy Foster in London from Brewin Dolphin on the line. So Guy, Happy New Year. Now let's begin with the UK. Mark Carney has said that he will not raise interest rates above their historic low of 0.5% until unemployment drops to 7%. Now predicting this would not be reached until 2016. So Guy, do you think we could see them reduce the unemployment target at the very first meeting of the year?
We think that there are reasons why he might eventually reduce that target or that threshold that he's discussed in the past. But I don't think he's going to feel under any particularly pressing need to do it right at the moment. Obviously, in general, most of the economic news coming out of the UK at the moment has been pretty positive, and so with inflation sort of drifting down towards target, but not looking destined to undershoot dramatically. I think he's going to be pretty happy to hold pat at the moment and wait and see how things develop over the balance of the year.
And what sort of week do you think it will be for the sterling?
Well, the pound has been extremely strong over the second half of 2013, and ultimately we're expecting it to weaken over the course of this year. It has reached a point of technical resistance at about 165 to the dollar, but nevertheless, I don't expect it to sink back too far from here right at the moment, just because the economic news continues to be so supportive.
And looking at the ECB meeting this week, now what sort of tone will you be expecting from Draghi? And do you think he is in no rush to change rates? And what sort of performance are you expecting to see from the euro?
Well, again, the question really over the course of this year or the early months of this year is going to be whether the ECB needs to do something to stimulate the Eurozone economy, and whether it needs to do something specifically to head off deflation, which has shown signs that it might be afflicting some of the peripheral states. Right at the moment, I think over the last 4 weeks, Mr. Draghi is probably going to have relaxed slightly in terms of his concerns over inflation. We had reasonable numbers out of Germany today. The Eurozone purchasing managers indices seem to suggest that pricing looked quite reasonable. So I suspect again that he is also going to be keeping his options open for the future, but not taking any dramatic moves this month.
And finally, looking at the US. Now, the US has had a pretty good start to the year. What sort of figures are you expecting to see from the non-farm payrolls, and what sort of week will it be for the US dollar?
Well, everything's been very supportive for the US economy, as you say, and I think probably just because we've had the number of data beats that we've had over the last 10 days or so, my feeling would be that you're likely to have a modest disappointment on the non-farm payrolls. Obviously, we know very well that these numbers tend to be very volatile, and they can also be quite sharply revised. So with about 195,000 new jobs expected, I think there's scope for a reasonable disappointment on those numbers.
Guy, thank you very much. Well, viewers, do stay tuned as we have plenty more coming your way.